Welcome back to Let's Invest with the ASX. In this video, we will provide an overview of fundamental analysis, an essential aspect of investing. Investment strategy requires understanding of fundamental analysis and technical analysis. Fundamental analysis involves studying factors that affect a company's earnings, dividends, and investment safety. It examines financial position, performance, competitors, industry trends, and economic conditions. Fundamental analysis can be quantitative or qualitative. Quantitative analysis relies on numerical data and ratios, while qualitative analysis involves subjective assessments. Fundamental analysis is forward-looking, but based on historical data, which has limitations. Intrinsic value refers to the actual value or book price of a security, in contrast to its current market value. The measurement of intrinsic value is subjective and depends on the valuation method used. Fundamental analysis is used to determine a company's intrinsic value and growth prospects. Intrinsic value is compared to the current share price and market capitalization to assess whether the shares are undervalued or overvalued. If the shares are trading below their intrinsic value, they may be considered good value or offer a cheap entry price. If the intrinsic value is lower than the share price, a sell or hold recommendation may be given. Ratio analysis is an important aspect of fundamental analysis, and we will delve into its significance. What are you trying to learn about the company? Here are the key points to keep in mind when reviewing financial statements and conducting fundamental analysis. Historical costs may not reflect real values accurately. Avoid drawing conclusions based on a single financial item in isolation. Consider the multidimensional nature of companies. Assess where the projected growth will come from. Be cautious of consolidated statements that may hide poor results in specific sectors of the company. When diving into the details, consider whether the growth in turnover is organic or through acquisitions, and assess the sustainability of profits and growth rates. Evaluate industry structural issues, such as competition and pricing power. Determine if there are barriers to entry that could protect the company from competitors and maintain pricing levels. Fundamental analysis involves comprehensive research, examining statements such as the balance sheet, profit and loss statement, cash flow statement, and letter to shareholders. By considering these points and conducting thorough analysis, investors can gain a deeper understanding of a company's financial health and make more informed investment decisions. Value investing. Value investing is an investment approach that involves holding investments considered to be of good value. It can be applied at various stages of the investing process, starting from top-down analysis of countries, markets, and sectors, to bottom-up analysis of individual companies. Selection criteria for value investing often include price to earnings, P/E ratio, dividend yield, price to cash flow, and price to net tangible assets. Value investing is contrarian in nature, taking advantage of market mispricing caused by emotional extremes. It focuses on identifying stocks that are undervalued despite having good fundamentals, presenting opportunities for potential gains. Australia has a significant number of value managers, including those specializing in deep value investing. Deep value managers concentrate on shares that are currently out of favor, but have the potential to regain market favor as their true value is recognized. Note: it is important to seek advice from a professional advisor before making any investment decisions, as this example is for illustrative purposes only. The investment process. The investment process for value investing begins by narrowing down the selection to the largest and most liquid Australian shares that trade with high volume. These selected shares are then compared based on various financial measures such as projected balance sheets, profit and loss statements, cash flows, and valuation of forecasted earnings. Value managers forecast the future value of the shares, calculate expected investment returns, and rank all shares on a daily basis. Filters are applied to select a specific number of shares based on the manager's strategy. A simple share selection technique for value investing may involve choosing the 100 most frequently traded companies from the S&P ASX 200 based on trading volume. Then, estimating a 3-year forecast of intrinsic fair value using historical data and factors like P/E ratio, EPS growth, and dividends. The shares are ranked based on their relative value, and the top 25 to 35 shares are selected for the investment portfolio. Regular monitoring of the investments is necessary to ensure they continue to meet the desired requirements and standards. If any investments no longer meet the criteria or standards, they are sold off. Dogs of the Dow. Another simpler approach to value investing is the Australian version of the Dogs of the Dow strategy. Here are the steps involved. 1. Begin with the top 50 industrial companies based on market capitalization. 2. Rank these companies in descending order by dividend yield. 3. Invest equal dollar amounts in the top 10 ranked companies. 4. Hold the investments for 1 or 2 years and then repeat the process. This strategy focuses on investing in companies with high dividend yields, indicating that they may be undervalued. By investing in the dogs of the market, it aims to capture potential value and generate favorable returns over time. Thank you for watching this segment on fundamental analysis. If you found it helpful, please consider liking and subscribing to our channel for more insightful investment content. Don't forget to use the flashcards and other resources available to enhance your learning experience. We appreciate your support.